Oh, stock nerds and market lovers. It is Ice Stormageddon Part 2 in Dallas. So we're doing this show remotely, and I've got a lot to cover with you. Danny, Don, Hunter, Alex, we're all here with you remotely. The other fellows are always remote, but Danny, Zach, and Danny and I are always kind of in studio hanging out and then bringing the fellows in. But we're all remote. A lot of things to cover, and I'll bring you right here first to the ticks. I'm with Zach pre-show. We start about 15 minutes, 20 minutes before the other fellas join, and I noticed that this tick happens. And this, what I'm showing you is, look, the markets are real choppy, but it kind of gives you a little bit of a ballast if you're watching markets during the day and you want to see if a possible bottom is being put in. It could be just for the day, but it happened last Friday, and I want to point it out to you because I wonder if the same pattern is going to repeat this Friday, where really it was an ugly morning, and then from like a phoenix, the markets rise. Nobody wants to be short going into the close, and markets have this great close. So here you got the high where I'm on my screen right here. 790 is about the highest tick of the day. And so that's a big deal. Now you can see here, here's Friday, some low selling ticks to start the day. And we get this plus 800 tick. It kind of starts a shift in trend. Whether it holds or not is a different story. But at this point in time, what you want to do is you want to ask yourself, who's more scared? And that's kind of what I was talking about last week. Who's more scared, bulls or bears? And so do bears, when they've made their money, they took a market that was up big. Like, let's look at this Amazon chart. I'm gonna put Amazon on a 5 minute chart. Like they took Amazon, high of 341, and if I did this post market, it's a little bit higher. And now Amazon's coming back up. Like they've been trying to drive down the markets. Look at S&Ps here. They drove down the markets, and now do you think bears want to? I don't know where all the noise is coming from, Zach, but if you could mute it, that'd be great.
I got
But
that.
now
Sorry, bro.
bears, no worries, man. Bears are like, do I want to give up gains? They're going to try and pound it down again. And so if it has the opportunity to be a runner for like last Friday, you got to obviously clear this 44.91 area. The only way to do that, now I don't know if it's going to do that. The only way to do that is with the ticks. And so I like to watch the markets on this dashboard. And so you got to clear these highs, but you can see the VIX here, the VIX futures, they're coming down here, and bonds are doing their job. Bond prices are coming off, and interest rates are going up. But if bonds can stabilize here, which would stabilize rates and potentially even rise a little bit, that would help stocks out as well, tech stocks in particular. And so we'll see how that develops over the course of the show. It's about 11 o'clock, 10:50 here Central Time when we're taping the show on a Friday. So we'll see a little bit of this develop, but probably won't see this all develop until we head into the last 90 minutes of trade per se. But Zach had a question before, or Zach had a comment as we were warming up here. To me, he said, are we going to talk about Facebook? And I said, we normally don't talk about things that are so, unless one of us has a different take on the news.
Yeah.
That you've heard. Like you're going to go to Bloomberg, CNBC, Yahoo. You're going to go wherever you go for your news source. We're not your news source. We're your analysis, and that's big. That's a lot different. I want to give you, and Danny and Don Alexander want to give you a look at things that you're just not going to hear in the mainstream, because that's not what they do. They report. We do a lot of analysis, and so Facebook's interesting to me here. And why is it? Because it's being revalued. So are they going broke? No. Are they going to zero? No. But this is what you see. Like you saw it with Netflix, right? Netflix slowing growth. And you can see it's come off here. It fills the gap. It's coming off here again. You're seeing stocks revalued, and that's all quantitative tightening. That's a QT environment. So we've gone from a QE environment to a QT environment. Quantitative easing. I haven't looked at the money flow in a while, but we might not even be tightening yet. It's just the thought that we're going to be tightening, and a lot of stocks are getting revalued. And then you have the jobs report today, and so with the jobs report, having the market look, however you want to interpret the information from the jobs report. I thought it was bad. I thought it was good. What matters here is how the market is taking it, and the market is looking at it as wait, there's a slight chance that Jay Powell in March, the next Fed meeting, could be more aggressive. Not just 0.25%, 0.5% rate hike, and so I think it's about a 30% chance right now of a 0.5% rate hike, and that's why markets would sell off on what was considered to be a fairly decent jobs report in the face of the latest variant of the virus. And so all of that is super interesting to me. But I think what's more important that you realize what's going on here is in this new quantitative tightening. And I want to take a sip of coffee from a giant mug, but I want to run through a couple stocks here from you. And if I get these, Alex and Hunter, if I get these wrong, I want you to just correct me, okay? So kind of follow along here. I want to cover some stocks that are not a part of the indices, the Nasdaq, the Nasdaq or the S&P. And I'll just show you a couple because like Unity's up 17% today, but I don't think Unity's not in the S&P 500. Okay, Unity Software, LCID, LCID, Lucid Technologies. I mean Lucid Technologies. That's Lucid Technologies, which is the worst stock Jesus ever invented. Lucid Automobiles, not in the S&P 500. How about Space? Chamath, Chamath SPAC, not in the S&P 500. Coin, 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 not in the S&P 500. And I'm wondering, I'm trying to think of a meme stock. I don't think GameStop is. I don't think Bed Bath & Beyond is either. I could be wrong about Bed Bath & Beyond. Not in the S&P 500. And what you're seeing here is, I believe it's a decoupling. And so if you're not tied to the indices, and we'll just put up SPY. Look at SPY here. Holding, like it's not death and destruction. I know the markets are down, and we know what the stats are for the month of January and how it's been a tough start to 2022. But look, you're holding the 200-day. You're not completely giving up the ghost. Find your positives where you can. But what I believe that you're seeing is a decoupling where in 2020, and for the most part, I would say 2021, or at least half of it, it didn't matter if you were tied to the indices. As a matter of fact, the mantra is you want to pick individual stocks. You don't want just the indices. You want to be in the names that are supercharged for growth. That was a different environment. That was QE, easing, helicopter money, as Danny would say. And so now you've got this QT environment that we're about to enter. And it appears that you want to be in stocks that are tied to indices. And they might not have the best charts, right? Well, Qualcomm's not so bad. They might not have the best charts, but you want to be tied to where the money flow is. And it's just clear that the biggest money flow in the U.S. markets comes from index investing. Think Vanguard, think all that money that people just passively invest in their 401ks and IRAs every month. And so does that mean, give me some other stocks, Hunter, that are not tied to the indices?
Off the top of my head, Palantir, a pretty popular one, especially among younger people. Uber and DoorDash also, I don't believe in any indices, at least not in the S&P 500. Snow, another one, not in any indices yet. Believe it or not, Blackstone, a financial company, BX, not in the S&P 500, one of the biggest market cap companies out there, that's not in.
Yeah.
But yeah, there's a handful for you there.
Yeah, and like Tesla is the 10th largest S&P stock, in the 10th largest company in the S&P by weight. Is Apple number one or Microsoft? I don't know who's number one. I just know Tesla's like number 10.
Yeah, Apple, then Microsoft, and Google, if I'm not mistaken.
Yeah, and so I think that's the correlation right now. I don't know if that's going to be the way it is for the rest of 2022. But to start off, right, and Don will point this out too, probably in November, Don, towards the end of 2021, this decoupling started, but now is accelerated. Do you have any thoughts on that? We got to bring Don back up, probably volume-wise.
There he is. Sorry about that.
Yeah. No, that's all right.
Big time decoupling. It happened for. Can you hear me?
Yeah, we can.
Yes.
Yeah, it happened first mid-February, and then it happened again in mid-November, where growth stocks just absolutely were sold, and both times it corresponded with rising interest rates. And then, of course, with the TNX and the TYX, the 10-year and the 30-year breaking out today, that's, as you mentioned, certainly not going to help growth.
Yeah, and so let's look at TNX here on a daily chart, see where we're at in time and space. And look, we're right back in that zone of the third ATR. And you can see, it doesn't mean we have to, but you spend a couple days up here, you pull back a little bit slightly. Those aren't really particular bad days for the markets. You spend a little time up here, pull back a little bit, but now you're accelerating. This is a really tough whipping environment. And not like we're telling you any news here. And that's, what do you do when you have like Apple, which pretty much saved the market, it felt like last week, and Google saved the market, and then this Facebook tank that's big. I mean, it's just tremendous, and so and you can see it reflected here in the Qs. And so I think if you're going to do anything this year, understanding where your stocks live, look at small caps. We can do RTY. You know what? Let's do IWM. Let's stick to the ETF that most people would look at. That's why, and most of those stocks that we're talking that Hunter named, I was talking about, they live here. It's 2,000 stocks. Most of them qualify. And you can see you just can't get anything going with those types of stocks. Hey, is Robinhood in there too?
I don't believe Robinhood's added to any index whatsoever. Yeah, so
Not even the Russell 2000.
I don't know. I'm not sure on the Russell. I know not the S&P.
And this is what catches the news though. Like on not the greatest day of the market so far, Robinhood up 7%. But Robinhood was what was it, like a $50, $60 stock just
80.
last year. 80, thank you.
Yeah.
Like
crazy.
Yeah, these there it is, thank you. These things have come down so far, and it's like, well, what's the fair valuation of these stocks in a quantitative tightening environment? And the answer is, I don't think anybody knows yet. They're being revalued every day as we speak. That's the problem. And so, is Amazon enough to save tech today? Not. I mean, it's up 13%. I don't quite know yet. We'll see if we get another Friday like we had last week, and maybe that's enough to stave off death and destruction for the markets just one more time. But it's hard. That's why, I mean, look at these ticks here coming back down again. It's hard for the markets right now to get traction when I feel's a tough word here, that there's just a ton of people still offsides in the markets. And they're offsides because they happen to be in the wrong stocks, and those wrong stocks are the ones not tied to S&P 500 or the NASDAQ 100. So I think that is honestly the big correlation. Dan, you have any thoughts on that? I should have given you a heads up that that's where I was going to go today, but I actually did, and I apologize for that. No?
Yeah, you asking me?
Yeah, I'm asking you if you could hear me or not.
Okay. Well, so like you said, nobody's for sure what's going to happen. You've got some indicators that are starting to flash bearish signals, but then you've got some that really haven't flipped over yet. So some of the consumer staples and some of the defensive names, really they've outperformed slightly in the past month, but they really haven't outperformed significantly like one would expect. The 210 Treasury spread, came down some, but it's not really negative yet. It's not flashing a recession. Now, Treasury yields are rising. I mean, TLT is down over 1% just earlier. That's a pretty big move for bonds. That's going to slow consumer appetite for risk. The main thing is that markets the indices were off. They've come back a little bit, but they were off 12% from their highs. The S&P, the Russell was down over 20%, right, and the NASDAQ was down around 15%. So you've got some red flags, but the markets just haven't given up the ghost yet. And here's the thing. When you get in a mature bull market, when you get in a mature bull market, it can go up further than you think, and it can keep going up, but the volatility increases. So when you're early in the primary trend, the uptrend, it's pretty smooth. It's kind of easy riding like a couple of years ago. Then last year it started getting a little bit choppier. And I'm talking about after COVID. So after the COVID shutdown in March, you had a big consistent rally for the rest of the year. Then last year, 2021 got a little bit choppy in the spring, and then you had a nice rally. Then it got choppy in November, December. Now we're kind of continuing that. So when a market switches from bull to bear, it struggles to stay in that uptrend mode. It tries to stay there. So you'll have this choppiness before it finally gives up the ghost and rolls over. Now, that said, it could still run another, it still could go up. You just don't know. And that's why you need a discipline. You need rules so that you can get in, and you need rules so you can get out. Because when it does roll over, it'll roll over hard. The market goes down a lot faster than it goes up. And as long as you have most of your principal intact, then you've got a lot of money to deploy on the other side of it to get back in. Whereas people that just buy and hold or have that asset allocation pie chart model, they're going to be going down 30, 35%. And they don't have any money to redeploy to get those gains on the outside. So in my opinion, the jury's still out whether this is rolled over or not. It's trying. And right now it's just a fight between the bulls and the bears.
Like we're still in a bottoming process by looking at the charts here. You're holding the 200-day. I think if you take this back out again, that you'll probably come back and retest the lows. You'll see. But I've got some strong on these charts here that a lot of people who watch our content daily have seen these. Just a high to low, and you can't clear the 618. You clear the 50%. You're below the 50% now. So if you can get back up to this 50% retracement level and clear, the next cattle fence, so to speak, is up here at 45.80. You're at 44.74. That's a big ask right now for this market. The market's just really super heavy. And if someone might say, it's easy to say inflation is bad, but I think putting some context behind it is really helpful here. And why would Jay Powell be considering a 0.5% rate hike coming out of the chutes? Again, I don't think that's what's going to happen, but it doesn't, I think we should explore it a little bit. So look at the journey with crude oil. And so here's crude. We're on a daily chart. Crude is really amazing here. Above 90, I believe, from the first time since 2014. That's when I joined Danny in March of 2014, and crude went on that amazing run. But what's super interesting here, let's set this to a weekly time frame, and we've done this before, stock nerds. But let me show you some others. Let's just start with crude. And this is what's going to hurt. It's hurting folks right now this winter. Crude from the bottom of March is up over 1,300%. How about RB, which is the gasoline futures? And just look at all the vehicles on the road right now. How big are they? How much fuel do they take? That's up over 450% since the March 2020 lows. How about, let's do some food pieces here. How about corn? Corn futures, here's 2020. You can see coming from there, you're up over 111% in corn. And these are big staples. About soy, I believe I got to look at my notes. XK, I always forget the soy. Soy's in everything. Let's see here. You are up, let's see, almost 90% in soy. One of the mainstays of the American diet there. Cattle. Talking about brisket. Look at brisket, upward brisket. Look at cattle, feeder cattle. You're up 58, 60%, and then we'll do one
That's
more.
why bacon is so expensive, right?
Well, right here is lean hog.
That's gotta be.
It's funny you said, yeah, lean hog right here up 134%. This is what Jay Powell's going to attempt to knock down. Like, what a needle to try to thread here. You helicoptered all that money into the market space, and prices now are running rampant. And I think if you just drove fuel prices lower, and that Jay Powell can drive all this lower by causing a reset, by triggering a recession. I know he doesn't want to do that. This is more this is at governmental levels above Jay Powell when we talk about crude. Like, how do you drive down oil prices? Make it more accessible. Make it easier. maybe give a tax break, a federal tax break right away on petrol. There's a bunch of ideas that you could float around there, but if you can reduce energy, NG is natural gas. NG gets a lot of play in the media because of what's happening in Europe. Europe just had a big reorganization, especially the UK, fuel prices. 2021. Let me take it down to a weekly chart here. Apologize. There it is. Look at natural gas in April of 2020. Just nuts, right? And I gotta go all the way over here. So natural gas up 214%. All of that is directing money to all that money being directed towards energy that's not being directed towards the rest of the economy. And someone might say, well, Amazon's certainly doing well. Okay, Amazon had a pretty big fall from grace here, being revalued. And as it turns out, they had a good quarter. So maybe the consumer is alive and well. Maybe we are starting to go back to work. Maybe that good jobs report means that we're done not working. Like the group of people that were quitting jobs, staying at home. Maybe it took this long to work that money out of the system. And maybe in the face of a new variant, we're going to go back to work, which would be super interesting to me. So anyway, I think that's where we're at. I don't think there's any, I'm looking for a Friday reversal day. Starting to see some signs of it. We'll see if it happens. But with that, I'm going to take it to Hunter. Unless Don, do you have anything to add to that? I apologize.
Yeah, speaking of jobs, I had a question for Dan. So Wednesday, we had an ADP report come out showing a massive job loss versus an expectation of a gain. And then 2 days later, we have a report coming out with massive job gains, even higher than what was expected. Do you have any explanation as to the huge divergence in those two reports of two places supposedly with their finger on the pulse of the job market?
Sure.
When you finish laughing, if you could enlighten us.
So sure, one is governmental accounting, and one is private sector accounting.
Oh, Dan, are you saying that something the government said it can't be trusted?
Well, I'm saying that they always want to put a rosy spin on things because they got to answer to the people and the voters. And so, and look, it doesn't matter whether you're Democrat, Republican. They've manipulated Fed data and BLS data, by the way, for decades. It doesn't matter what you're doing. Quite frankly, they're all trying to get your vote. So they've shrunk the participation rate. We've talked about this many times. They've shrunk the participation rate on how they count for the workforce. How many people are looking for jobs? So they figure if you're sitting on the couch for a very short time period, you're not considered in the job force, even if you're 24, have a college degree, and easily employable. Okay, if someone offered you a good job, you'd take it. Well, to me, that person needs to be counted in the job group. It's called the participation rate. It's down to like 62% now. So of available workers. So that's the issue. So when you shrink that, it makes the number look better for the new jobs created. So if you've got a smaller denominator, it makes a bigger number. And so with the government, the BLS, Bureau of Labor Statistics jobs reports that comes out on Fridays, you got to take that somewhat with a grain of salt. Do you know that their margin of error is like 125, 150,000? I mean, it's big. So a lot of times their margin for error is bigger or as big as the number itself sometimes. So, it's kind of hard to do that. The ADP is a private payroll service, and they really kind of do it tied to businesses and corporations. And so you can get divergences in those.
Okay, so that's private only, and then the other one includes government jobs.
Well, no, but ADP also is a private survey, I believe. It's basically
right.
Yeah, and so they're not changing the way they do the counting often, and they're not kind of manipulating. There's a couple different inputs to the way that the BLS counts. Okay,
and then a very important follow-up question. Important follow-up. Who's that in the picture on the wall behind you?
Oh, that is Andre Agassi when he had hair. Let me move out of the way. And then that's his coach, Bollettieri, Nick Bollet, and that says Andre Agassi, the signature, and then it says to the Stewart family, best wishes or whatever. So my family has a fiberglass backboard company that manufactures fiberglass backboards for tennis courts, and they used to be Bolletary backboards. Bolletary used to do our backboards, man. I actually got to go to Bolletary's for a week free.
Daniel, hold on.
Yeah.
That
Tangent
picture-
alert.
Yeah, hold on now. This is
I started it though.
we're
Wait a
gonna
second.
we're gonna peek into the world of Daniel here for a moment. Daniel, that picture used to be at the office. Am I correct?
I have one at the office.
Wait, the exact one, the exact same one.
He has
or
one
you
in
brought
every
that one
room.
home?
I was thinking
No,
about
so
that.
I'm no.
We're gonna get.
So
We're
we
gonna
had
get there.
two. My dad had one. I kind of helped him promote,
Oh,
start
okay.
the company, and my dad had one at their house, and I had one. When he passed, my mom was decluttering and said, "Would you take? I don't need this."
Understood. I
So-
thought for a second that the only when we started working from home because of the pandemic, I thought you left all your family
took it
photos
home.
hanging on the wall at the
No.
office, and you brought Andre Agassi home. That's and
No,
that
no.
would not shock me one bit that you brought Andre Agassi home. Here, Danny, you've got a great forehand, Andre. Like that's what I thought you brought home, and you left your pictures of your family at the office to be, just hanging on
Tim,
the
you
wall
can
with the
see it.
pandemic.
You can see it in the passenger seat, buckled in, right
Yeah.
as he's driving home, with the seatbelt across the front of it.
Oh my gosh, I totally, and it wouldn't shock me that Danny would do that. Like he would take the photo of Andre Agassi hanging up behind him, like Catholics do a rosary or a picture of Jesus, and leave his family photos at the office. They're good.
I got the family photos in the other room.
Yeah.
Trivia
The room
question.
that we can't.
Trivia question. Does anybody know Andre Agassi? Agassi is his last name. Does anybody know his full last name before his dad emigrated from Persia?
Smith.
It's a good guess.
Agassi. They shortened it to Agassi.
Huh.
I have a great Andre Agassi story. I don't know if I've ever told it. It's not my story. It's from. He has a really good autobiography out. If you ever want to listen to it. And Danny, correct me if I'm wrong. Andre Agassi used to beat the snot out of Boris Becker. Could not beat Andre Agassi. Is that correct?
Well, Boris
Sure,
had a
that's
few
right.
wins over him, but Agassi had the perfect game to beat Boris.
Well, no,
You
it
take
was
Boris' stuff away, and then
Agassi.
he's not.
Well, that was what it was. Okay, funny you said that. So in his book, Agassi talks about how Boris Becker had a tell, and he would put his tongue to one side to where he was going to serve the ball. Agassi picked up on that.
Seriously?
Early on in his
yes,
career.
Yes.
And so
Huh.
Becker and Agassi are sitting at a bar talking. And finally, after they're both retired, Andre Agassi tells them this. And Boris Becker he was blown away. It's a great, if you can ever just find that passage of the book, it's amazing. Like, what a
That's
competitor.
amazing.
To study that much film, to study the person you want to dominate, because Boris Becker was 80s tennis. And then to figure out that they have a tell, and then use it against them to the point where, because Daniel know this, all the coaches sit in the stands watching, they're giving signals to the players. And to think that Boris Becker's team could never figure this out, how Andre Agassi just seemingly knew where the ball was always going to go. That's amazing.
He had great eyes, too.
So,
by the way, Tim, the coaches are not supposed to give signals. That's illegal.
Yeah, this isn't the Astros.
Congress isn't supposed to inside trade, and Goldman Sachs has to get the job report before it's released.
So Venus got in a big sheet. Williams stormed, not Venus, Serena Williams stormed off and got in a big fight about a year ago because they were accusing her coach of giving her signals.
Yep, giving signals.
Ooh.
Yeah,
Oh.
just crazy that somehow we load the government up with all Goldman Sachs alumni, and Goldman Sachs just seems to know what's going on all the time.
That King Richard movie, the Williams sisters' dad. That was a pretty good movie. Will
Was that
Smith
good?
as
Was that good?
Richard Williams. Yeah. Yeah.
Hmm.
Will Smith's
Oh,
phenomenal.
you know what? I'll before we go to Hunter, real quick, I've got more entertainment news. This is probably a good time to share it before we get more knee deep in the stocks. Give people a little mental coffee break. So, Danny, I've got the new child in the house, and Tanya and I are up all hours of the night feeding him. I found. Does anybody remember the TV show, the game show Supermarket Sweep? I think our
Yes.
audience might.
Are you
Yeah,
going to talk
Supermarket
about
Sweep
the redo of it?
No, that is awful.
Oh, you're watching
That
the
is
old
not.
one. Okay.
Oh, 1990
Dude,
to
1990.
2003.
Was that after like All Star Wrestling or something followed up?
No. Supermarket Sweep is the creme de la creme of game shows. So get this. We use Amazon Fire as our interface. And they have this channel called IMDb. Okay. So it's free. And so on
Mhm.
IMDb, they have Game Show Network, right? But Danny, get this. I'm feeding Graham, and Tanya's flipping through the channels because she doesn't want to watch golf anymore or financial news. So in the middle of the night. So she finds a game show on IMDb, and then they have, Danny, two channels. One channel specifically, it just plays Supermarket Sweep. Imagine
Mm.
24 hours of the best game show ever created. One. And then, Daniel, they've got Price is Right, 1980s Bob Barker. That's all they play. It's the Bob, they call it the Barker era. It's literally just Bob Barker doing cringeworthy stuff. Like, I mean, I get it. You can't take 2022 and relay it back to 1984, but the stuff Barker does is cringeworthy. And when you're up at 2 or 3 feet in the little guy, it's like, wow. I'm like, did you see that, Graham? Whoa, no, you can't kiss people like that anymore. And so it's the Price is Right channel. And you can look at all these devices you can get it on. Like, you can just download it to any of these things. Google TV, all the Amazon Pro. I mean, it is amazeballs. Highly recommend. You can binge Supermarket Sweep.
Huh. Who doesn't love Supermarket Sweep?
I've never seen it.
I haven't met the pro.
Hey Tim, little more trivia since we're talking about tennis and the Price is Right game show.
Hold on, just tell me you were on Supermarket Sweep. Tell me you were on Supermarket Sweep.
No, I actually, my coach at Vanderbilt won the Price is Right game show, and we had to all go up on stage.
What?
Showcase Showdown.
Wait, you were on stage?
He
on
won
Price
it.
is Right?
He won both of them. He won them both
Can we
of them.
find the video?
Oh my gosh, what year was that?
Is there a video of that?
Feeding Graham.
Yeah, I mean,
I'll look for
Wait,
it.
They were like, come
so
on, let's
there's
go
a-
on. I was like, no, I'm not going up there.
Tim's gonna see Dan on TV one night. Yeah.
I'm going to call him. The
Danny,
moment I do it, I'm going to call him.
Danny, you have any idea what year
He made
that
us
was?
all wear a warm because he really wanted to do it. He had at University of Tennessee, his star player got on and got called up and won the showcase. So when he went to Vanderbilt and I was playing there. So we went and played all the California teams during the spring break. And when we were in LA, he said, we're going for one day. He took the day off. So we'd all go, and you stand in a line of like 6 people across in a whole, and they just come and ask you 1 or 2 questions very quickly. And the guy will kind of wink and nod to tell who they want called up. So you think it's random. It's not. They already know who they're going to call. But he said if we all wore our warm-ups, one of us would get chosen because they like groups. And so he got chosen. I would have rather preferred to go to
down.
the beach.
Danny, those showcases are amazing. Best games and Price is Right. Plinko, the game where Bob Rolfs. I like that one. I like the Yodeler, where the mountain climber goes up. Oh yeah. And then, and they always do when they give away a new car. They do. You got to guess the numbers on. It's called 3 Strikes or something. But I like that. Anyway, Hunter, that was.
Hey,
the
you
got to
watch the documentary. You got to watch the documentary on the guy that got the Showcase Showdown correct to the dollar, because he knew the price of every single. He memorized with a spreadsheet the price of every single prize they would show on The Price is Right. Wrote it down, memorized it, had it all up in his head, got the Showcase Showdown to the dollar. Yep.
That means you win both
fantastic
showcases.
documentary.
Yeah.
Yep.
When you get both at $100 of the showcase, you get both of them.
Yeah.
Wow. I'm going to look that up. Documentary. Anyway, so a little joy there for people who aren't so intense that like to be entertained. If you don't like to be entertained, you probably fast forwarded this, and now we're back to Hunter. Go ahead, Hunter.
Well, believe it or
What you
not,
got
me and
for us?
Nicolette actually, we like Price is Right too. What's the new guy? Is it Drew Carey, the new guy?
Drew
I think
Carey.
it
Yeah,
is.
Drew Carey.
Yeah. Yeah, we watch it every now and then just to kill time, or just when there's nothing else on. But as far as stocks go, I've got a handful of oil companies I want to highlight, and really because oil is the leading sector in the market right now. But I want to highlight some names that maybe aren't the normal names everybody pays attention to. So some of these I've already talked about, some I haven't really. But Tim, we're going to start with oil and gas pipeline first. So if you can pull up LNG for me, it's Cheniere Energy. I don't know if I'm pronouncing that right at all, but
yep, Cheniere.
The point I want to make here as we go through these is it's not just like you've got oil and gas exploration or just one area of oil that's strong or that's showing significant relative strength versus the other. This is the entire group, whether it's integrated, whether it's services, whether it's the actual exploration. There's strength across the board, and there's a lot of names exhibiting really constructive charts. So LNG, this is oil and gas pipeline, acting really well. MLPX is another in the same space, Tim. MPLX. M as in Meta, like Facebook, which is, I guess, no longer Facebook, but the same, very similar chart here with LNG. Tim, we've talked about Halliburton and SLB. That's Schlumberger and Halliburton, two of the big names in the oil and gas services space. They drive the moves in the OIH ETF. You can see these charts again. These are charts that are very close to highs that have either formed flags or consolidating near their 52-week highs. And then another sector that's held up really, really well, especially against the S&P and against market pullbacks, is the oil and gas integrated sector, which is going to be your Chevron, CBX, your Exxon, XOM, as well as Conoco, which just reported earnings, I believe, yesterday, COP. So all of these names, and these are in various areas throughout the oil and gas space, various steps of the process within this industry and sector, but strength across the board. And if you happen to have Market Smith and go look at the industry groups, you'll see 4, 5, 6, 7 different variations of the oil and gas space up there in the top 15 or 20. So I just wanted to highlight that there's a good bit of names and a good bit of different areas of oil that are acting well. These are liquid names that I brought to you as well. And then lastly, real quick here, Tim, just as far as individual names go, CF Industries, the fertilizer space, as well as the commodity space in general, continues to act really well. I know that goes hand in hand with the oil conversation, but MOS, another name here, Tim, Mosaic, and then NTR. I know we've talked about those over the last couple of months, but there's a good reason for that. They've been the leading stocks and leading sectors, both oil and this chemical agriculture space. So I don't want those to get off of people's radar. Those are some new oil companies as well. And Tim, real quickly, before I kick it back to you and we move on to Alex, I do want to talk about QQQ real quick. If you could just pull up the Qs for me. And I know I've talked about this on my video, but I just want to highlight it as a really easy place to kind of look at the Qs from a line in the sand standpoint. So this 350 level is basically the highs from the consolidation down there near the lows, as Tim is going to be able to kind of show you there from back in the end of January. And what you're going to want to see is that area hold. And today, so far, it kind of did. We bounced off of 352-ish. But if you're a bull or if you're optimistic here, you're wanting to see that 350 area hold. And then secondly, you want to see the Qs and the S&P get back above the 8-day. So they both had 3 or 4 consecutive closes above it. And then with the nasty action yesterday, closed below. First step towards riding the ship, at least on a short-term basis, to get that trend moving back upwards is to get back above that 8, have a close above the 8. That's kind of what I'm looking for. Is if you're looking for a bull, if you're looking optimistic here, you want to see moves above yesterday's high on the indices, as well as a move to recapture that 8-day. So that's all I've got. And the last thing, actually, Tim, if you pull up TLT again, because you highlighted this earlier, you highlighted bond prices. Just pull up TLT for me, and you'll see that this 140 area is a really, really big area. So the breakdown today of extra importance, you might say, because you can see this base, as you might call it, kind of going back to where Tim's drawn that line there. We saw 141/140 hold, but not the case today. So a somewhat important breakdown here on TLT. And that's all I got, man.
Awesome, man. That was great information with that. Let's take it. Alex, what you got, buddy?
Yeah, I got some stuff to add to the oil stocks that Hunter had brought up. I noticed that the best names right now are domestic oil companies like Devon Energy, Matador Resources, particularly in the Delaware Basin and the Permian Basin in West Texas. I found that I think that has to do with cost overseas tanking. Like companies like Exxon and Chevron will do well in this environment, but if you can find U.S. based companies that have their shale extracts out of the West Texas area, or even in the Dakotas or northern Midwest area, that's probably your best on the margins for those companies. So those will do perform the best. I actually have some option stuff for you today. If you can pull up the tables on the QQQs, something was pointed out to me from another options trader. If you could pull up the December
Zach, go off the
strikes.
charts for me for 1 second, Zach. If you could just take my charts down for 1 second. Thanks, bud.
Got it.
Pull these up. Okay, go ahead. You can come back to the
Yeah,
charts,
so the Qs, if you could pull those up and then pull up the December standards. There was a $34 million block trade on the put side on
the
the
December
Decembers,
22s, the quarterlies or the monthlies?
the standards. So the monthlies.
Okay. Okay.
And
Let me
if
get open
you go
interest.
to I think it was 390. Or no, excuse me. I'm sorry. It was 305 or something. Right there.
305.
Go back up. See, the volume should
Right
be 18,000 on the put side.
I got 20,000 here at the
Keep going up.
310s. There's 50,000 right here, open interest on the 300s. I've got on the put side.
It should be the 310 puts.
I got the 310 puts right here.
Yeah, so the volume, you see that volume? So
yep.
I'd calculate it's about $35 million. So one of two things is going on here, because there's always two sides to a trade on options. Someone's got a massive bet that we're going to just completely go kaput this year, or there's a bullish spread where they're selling those puts, someone bought them, but someone also sold them. And if you sold them, you're thinking that the market no way is going to hit that strike, and they're just going to collect the premium. When I say that, options decay over time, so they're just going to collect income over the next year because the Qs may never hit that strike. So it's hard to say, but that's a massive order. The other trade that happened today was if you pull up the spiders SPY, and you could pull up the 390 puts, same date, December. There was 8,000. There was an 8,000 block order on the Decembers.
What strike?
390.
Which
puts?
390.
Yep.
Here we go.
Right there. So what's interesting too, whoever did this, whatever fund, I don't know, or some billionaire, whoever did this, picked the same size too. I thought that was interesting. I think total was like 50 to 60 million on options. It's not something to ignore or brush off. That's I never heard of that. That's not like a common thing to see. So we're in either a spot where, like you said, we could be bottoming and someone's just going to collect, or they think we're just going to break wide open. But it's something to notice because the options markets are kind of under the radar. People don't really pay attention, but I do. So
awesome, man. Is that all you have?
Yeah. Yep.
All right, Don. We've got 21 over 21, dirty 30, no good dirty market. What do you want to do, man? Oh, you want to talk about the Jaggles?
No. No way.
By the way, if you have any questions on what Alex just talked about, look, Alex at revereasset.com. Anything that Don's going to cover, Don, Hunter, look, our research is available to you. Anything that Danny talks about, you want a signed picture of Bjorn Borg, maybe Andre Agassi, Jimmy Connors, you want some Lipton tea with them, Danny's got it all. So look, Dan at Revere Asset, Hunter, there's Muriel if you want to talk to Muriel, 855-722-5932. Is how you get a hold of us. If you want to talk football with Don, he is more than happy to do that. Super happy that the Eagles are invading their winter home, Jacksonville. Go ahead, Don, take it away.
Jags are a clown show, and let's move on. So
I'm right with you there, buddy, with the Cardinals.
God. So let's flash back to last Friday when we did the show around noon. The markets looked like they were coming apart and going to test the lows of the prior Friday, and all this was being done under the 200-day moving average. Yes,
Oh,
fly
I'm sorry.
Eagles
Where are we
fly.
at, Don?
And then there we go. So all of this was being done under the 200-day moving average. After 2 o'clock, we had a massive rally into the close. We closed right below the 200-day moving average last Friday. Come into Monday, we opened mixed, and then immediately the buyers took over, took us up through the 200-day moving average, right below the 21. So we flipped from just really barely in the market. We're not going to ignore what the market's telling us. So we got off the hedge side, added some SSO exposure, and bought a couple of stocks. So big move up 4 days in the market off of the lows from Friday. Then we had the crazy reactions to earnings from Facebook and Amazon Wednesday night and Thursday night. Big gap down Thursday night. Broke back below the 21, but we're holding the 200-day moving average. Now, if you look at what we've retraced, obviously anybody that follows us knows we prefer the markets to be above a rising 21-day exponential moving average. That's when the wind is at our back and things are most favorable for the types of stocks that we invest in. So not happy to be below the 21. We've got some things that are working. We've got some things we took quick losses on. Bought, and this is feedback from the market. We bought strength in Google, Amazon, and Qualcomm, and got stopped out for about 0.1% loss on all three of them when they reversed. So that tells me that the market is selling strength, selling the top of the range, but it's buying some of the better stocks on weakness. Now, how that's a dichotomy. How can I say that? The 21 over 21 list, 20 of the 21 held their 21 very nicely this week. The only one below it right now is John Deere. So leaders are acting a little bit better than the indexes are acting. So that's a good sign for the market. The pullback has been between the 38.2 fib and the 50% fib. That's a reasonable retracement of the move up from Friday off of Thursday, and we're holding the 200-day moving average. So those are on the plus side of the market. The market is moving incredibly fast and incredibly volatile. When in situations like this, we focus on fewer stocks and more on the indexes. Let the indexes battle it out around various support and resistance levels, and see where it goes. And we'll go in the direction of the winner, whether it's bullish back above the moving averages or bearish, which would be a breakdown. And these are the key levels: a breakdown below the 200-day moving average, which is currently 44.44 on a daily chart in the S&P, or around 44.58 on a weekly chart in the S&P. So that's the key area
Awesome.
that we're watching. We pulled back today to 44.50. So we're holding the 200-day moving average. As long as we hold the 200-day moving average, we'll keep some of our exposure on the indexes. We hold 4 stocks that were profitable in Apple, CF, Devon, and Bros. I mentioned we took quick small losses on AMD, QCOM, and Google. And strength is being sold, but weakness is being bought. And ultimately, that'll resolve one way or the other, either with us breaking back through the resistance. Right now, the 21-day moving average on the upside on the S&P is resistance. We're actually below the 200-day on the NASDAQ 100 with the big gap down from the Facebook earnings miss. And so we're watching both of those levels closely.
This Bros chart is super interesting to me, Don, because it flies in the face. Maybe it's just not popular, like the stocks that we were talking about at the beginning. But Bros is flying in the face. It's not indexed, and this is a really good looking chart. The anomaly, who knows? Good looking chart, not indexed. It flies in the face of everything I said at the beginning of the show, but Man, that's a good looking chart there. Oh,
Yeah,
this week.
great
Super
move
nice.
up on Tuesday into resistance around that 60 area, and then every attempt to get through that this week has been sold, but that corresponds with a 2-day pullback in the markets also. So definitely one of the strongest growth stocks in the market. If it moves through 60, it can really go.
Yeah, that is a great looking chart. Awesome. I'll tell you what, Danny, could you do me a favor this week, please? Get through the standard close, but do it expeditiously, because I've got one last thing. Don't do that long close that you normally do. Just do the short close.
Folks, if you like what you heard, please tell a friend, tell a neighbor, send them to revereasset.com, and they can sign up, they can hit subscribe, and they can get our daily market insight newsletter that goes out every day after the market close. And then they'll also get this podcast. We won't reach out to them or spam them in any way. It's up for them to reach out to us. It's for education and informational purposes only. If you want a complimentary portfolio review, or just have a stock you want to ask questions about, or just have a topic you want discussed on the podcast, just send us an email. You can email me at dan@revereasset.com, or any of the other guys, Tim at revereasset.com, Hunter, Alex, or Don at revereasset.com. And you can always call us old school at 855 Real Wealth.
All right, 3 things on a serious note. Look, there's a lot of folks that watch our videos every week. And I want to point out something that Danny does, whether you're a client or not. If you've got life planning issues, call Danny. What I'm trying to get at is the moment that something life altering happens to you, it's hard to take in information. You might not be thinking straight, and so if you've got a life insurance question, do you have enough? How do you execute on policies? All that kind of stuff. Like, we don't sell any insurance, but Danny's an expert in this field, and we do all this planning for clients for free. Whether you're a client or not, though, look, you're going to get a straight answer from Danny, and he's going to tell you the things you need to do before that life-altering event happens. And so I really encourage you to take advantage of it. Look, we got nothing to sell you. You're not going to be in some pipeline. Look, the people that subscribe to us know this. You just get a video 5 nights a week. That's all. Second thing. Well, I had 3 things. I guess that's kind of both of them. And then the last thing is I'm going to say goodbye to Alex. Alex is going on to do some different things, and I want to say, really enjoyed working with you, and I think I speak for all of us in saying thank you. You have anything you want to say, Alex?
Hey, thank you. Yeah, gonna try some other stuff for now. I'll still do some research and still be in contact with the team. I think the investment advisor route for me, after a year of experiencing it, managing other people's money, is a little bit different than trading your own account. Regardless of being up or not, I think my personality, if anyone wants to get in the business, just know that the responsibility of managing other people's livelihoods is a big. It takes a lot of mental focus, and it's not that I didn't have the focus, just being able to sleep at night. I just don't think that was for me. So I learned a lot, and these are a great group of guys. There was no burn bridges. Still in touch with the whole team, and it's been a great experience, and I appreciate it.
And by the way, Alex is actually going to be working on a consulting basis for us too. So it's not we're not severing ties completely or anything.
Danny, you're not getting to what people really want to know. Are Hunter and Alex still going to be a fantasy football team?
Oh, that's a great question.
Yes, we have to redeem ourselves after the abysmal performance that was Christian McCaffrey this year.
You mean the route?
First pick.
The route?
It was a tough year. Number 1 pick, first year in the league. We get McCaffrey, and he's out for like 90% of the year. It's tough to come back from.
Yeah, I had Derrick Henry, and I finished second.
Don, you're not supposed to say that.
We
got to have the excuse. Yeah. Well,
the student has not become the master yet.
Yeah, exactly.
Not yet.
Awesome. All right. Well, listen, we wish you well, Alex.
Thank you.
And it'll be good that you're staying in touch. All right, Danny, take us home, man.
Folks, we'll talk to you next week on Your Money.